Okay, good morning, folks. Welcome to Swing Trading Today. This is Bob Desmond, and it is, what is today? It's so early. 5/26, 2020. Okay, crazy morning today. Name this video, What the F, WTF Wednesday, because there's a lot going on in the market that is very odd. It began last night. And we're going to go over that in a moment. First, I want to talk about our sponsor being TrendSpider. Folks, automate your grunt work and speed up your technical analysis by improving your accuracy by using automated trend lines. If you're experienced as I am, you still need the automated functionality because it hones your skills. It validates the accuracy of your trend lines, plus you miss trend lines at times. And when you are surprised that you missed a trend line, a support level, or a resistance level on TrendSpider, you learn something new. You appreciate the value. If you're new to technical analysis, don't begin with the automated functionality. Begin by drawing your trend lines first manually. Overlay the automated trend lines to see whether or not you're accurate with your identification of support and resistance levels. That really refines your skills. It's real-time coaching by an algorithm. Folks, it's the way to go. So, again, automate your grunt work, speed up your technical analysis by improving your accuracy. There's no sense in improving your speed of analysis if you're not going to improve your accuracy. Reduce costly analytical mistakes and time your trades with precision using their alert functionality. I use it. I will be using it on this commentary to give you a demo. When I do members stock chart requests, find winning chart setups with their scanners, and use the discount code below, 35% discount code, 7-day free trial offer. Take a tour, browse around, and they have a 7-day free trial, folks. You can't go wrong. Cancel at any time. Let's get to it. All right, so last night, I added to our silver position. This was after the close. And I looked back later on. It was after 8 o'clock. And something odd happened. This is the 10-year yield. And the 10-year... Hey, Tom. The 10-year overnight after hours gapped down, a massive, massive gap down. That means that yields went this way, folks. And I've been warning of the possibility of yields breaking out at any time for a while now with members. And this is a pretty significant breakdown. Now, I had expected to take a look this morning at gold prices. I expected them to be down. They have actually broken out overnight. We were higher earlier. We did fade. Silver is up, but this candlestick here opened up 5 minutes ago at 5 a.m. Tom, you got to pick one, dude. Whatever chart you want me to go over, I'll go over. I have a bunch I have to go over for members, so just choose one, man. So what I want to know is whether or not we take out the lows of that prior bar. because that will not bode well. And we've been seeing a lot of micro head and shoulder setups of late. You saw it yesterday with Microsoft, a bunch of other names. Left shoulder, head, right shoulder. If we have a gap down on yields like this, I'm worried about the ability of gold and silver to continue this trajectory higher. They had great days yesterday, bullish reversal bars. We're going to go to equities in a moment. You can see we're weakening up here on gold. I'm negative projecting right now, admittedly, because I worry about my risk more than I worry about making a profit. So we are above 1900 the ounce, which is good to see. We haven't been there in a long time. Now, what has me troubled more than yields is the dollar relative to gold, because they usually trade inversely. We're still trading with an 89 handle. Which is good. And here is our trading range. 90 being stiff resistance and psychological resistance. Whereas now, they're trying to defend the lows of, what was it? I think it was January of last year on actually, I'm sorry, of this year. Yeah. The low was 89.20, 89.21. Because if that goes, we break to a new lower low, look out below for the dollar. And it's going to happen. It's just a matter of when. Now, here's a surprise. So we have the dollar up. We have yields up. And NFGFF, you got it, Tom. We have the NASDAQ, which is up as well. But I'm going to caution folks, man. We have seen the past few days where Thursday, we had a great day. Last Thursday. Follow through on Friday, reversal bar. Good day. Early morning yesterday. What did we do yesterday? We reversed. Yes, the NASDAQ eked out a gain, but you saw reversals all over the place, and it wasn't just the NASDAQ. It was the NASDAQ actually closed up due to the fact that yields closed down. Now yields are up, and the NASDAQ is up. Something's not rhyming here today. I'm telling you right now, it's going to be a volatile day. Because this is not going to last. Let's take a look at what the large caps are doing. S&Ps. They're up. They're a stone's throw away from breaking out to a new all-time high, if you can believe that. And it's a 4-hour chart. Yeah, we broke down. Let me redraw this to make sure I'm accurate. We just dropped down below support, 4-hour time frame. I had expected better price action on the S&P 500 relative to the NASDAQ, but that doesn't appear to be the case. This bar is not closed yet. We have, 4 hours to go almost before it closes. For all I know, it could be broken out by then. Because what should do well today with rising yields is energy, transports, banks. I have more hope for the S&P 500 than I do for the NASDAQ. The Russell 2000 up nearly a half percentage point this morning. Another area where you saw a big fade on Tuesday lower highs, lower lows. So what this fading does, when you get these gaps up and then you get a fade on the day, the following day, or a gap up in the morning and a fade that day, you get a sequence of them, you get a string of them. The retail investor gets burnt and they shy away from the market. So you really can't say that because two of the requests I have this morning are GameStop and AMC, which were up yesterday. So the retail investor is still out there, but more and more you get these gaps up, fades on the day, and they're crushed by the end of the day. That destroys confidence, and that builds pretty quickly. Because this market is not being driven one way or the other, up or down, by institutions. It's being done by the retail investor, as noted by volume, and probably some algorithmic day trading, and that's about it. Let's take a quick look at oil. Oil is up. It has been weak. At least yesterday was weak. The trend is still up. But we've stalled out here. Are we consolidating? Maybe. But as goes oil, so goes the energy sector. And the S&P 500 to continue up higher with rising yields needs the energy sector. Natural gas. Now, we're long of natural gas using a leveraged ETF called Boyle. Hey, Tommy, how you doing, man? Good to see you. Joseph Gardner, good morning to you. Yeah, we'll take a look at DBA. I haven't looked at DBA in a while, and it's time to, given the pullback after that CPI report a couple of weeks ago in agriculture. I think it's due. I think it's a good call to go over that chart. So yeah, we'll take a look at that one. Tommy, it's break 1900 for gold, but will face major resistance. An area around 1970-2000. Yeah. I honestly, Tommy, I went over this earlier. I don't know when you joined in, but with yields this morning gapping up and gold up, I'm very surprised, especially to see gold above resistance at 1900. I'm sure you're right, around 1972,000, you're going to have resistance up there. But, circling back here, because I'm fascinated this morning about the price action. I really am. But before we leave here on natural gas, we have a big move higher this morning. If I didn't mention it, I believe I did. I'll repeat it just in case. I apologize if I am repeating myself. We are long of Boyle, leveraged ETF, putting you long of natural gas. I am not long the common. I sold naked puts. 25 strike. Our basis cost, if it was assigned to us, would be $23.10. So all we're doing here is just generating cash flow. Boy, let's see if they're popping it up this morning. And they are. Good. So our basis cost is down here at 23.10, and they're gapping it up. So Boyle looking good. Let's circle back to gold because, again, I'm fascinated. Yeah, we're pulling back here a little bit. We gapped up above resistance overnight, and now we're retesting the breakout point. Does it hold? If yields were down today, I'd say no doubt. We're going up higher here. We had bullish reversal bars on gold and silver yesterday. I wanted to add more to the gold mining stocks, silver mining stocks. I didn't because we saw a bit of a fade. Let's circle back to silver. It's consolidating. And here are bond prices today. Here's where we closed. Here's where we're going to open. Nugget moving higher this morning. We're long a nugget. The VIX down, as you might expect. Very strange morning. Before we go to DBA and the other requests, let's see what GameStop and AMC are doing in the pre-market. GameStop, incredible. Continues its rip higher here. This is a 4-hour chart. I will point out that we have RSI at around 84. Now, I shorted GameStop several months ago, but at that time, we had RSI. It was up here. RSI was like around 90, something like that. It was nuts. But GameStop this morning, I got to tell you, I look at this chart, and it looks as though it wants to go higher. And I'm not talking about a little bit higher. It looks like it wants to go a lot higher. So GameStop looking very strong this morning. Just keep in mind that chasing the rallies in the morning of late has not worked. So when I look at these, all I think about is head fake and a fade. AMC, yesterday's close 1641 this morning. Last tick 1705. A massive move up higher yesterday. It looks like it wants to go up higher. Strong stocks tend to get stronger until they don't. So both AMC, GameStop looking strong. But if you're dead set on buying these, you really need to think about waiting until that 3 o'clock hour Eastern Standard Time to see whether or not the gains they've taken, that real estate they've taken in the morning, they have not given up by 3 o'clock in the afternoon. So we've been seeing that of late. Don't fall into that trap. That's a cycle. And it's a sign that the market is weakening and get ready for a correction. Not necessarily a crash, but a correction. Let's bring up let's talk resistance levels. Wrong symbol, Bob. Okay. Warning flag on GameStop. This is at least on a 2-hour time frame. We hit resistance yesterday. So just beware, and we backed off of it not once but twice. And this morning we're poised to gap up through it. Does it hold? I don't know. Nobody knows. You got to wait until the end of the day to see whether or not the market defends that real estate. Daily chart. A big gap up higher through resistance. Technically we broke out. What I'd be looking for today is a retracement and a retest of this breakout point. And keep it active for a few days. Great volume yesterday. Really great volume. AMC. This is an old alert. This didn't fire off yesterday. We broke out yesterday. You know, same deal here. I'd be looking for a retracement. These are volatile stocks. Have no doubt that they can retrace all the way back down here. Keep a little bit of sensitivity on there. AMC. Now, me, I wouldn't buy these stocks, but what I would do is sell deep out of the money, naked puts. I'm talking about deep out of the money, naked puts. And when you hear puts, it sounds bearish. No, it's actually bullish when you're selling them. We're the casino, not the gambler. And the premiums are so fat, meaning you have so much implied volatility on these options that I can go all the way down to $8, $9 per share and still generate a fairly decent premium. So AMC looking for a retracement back down to support at around $14.50 per share, unless of course a continuation move happens. We get a pullback, orderly pullback, and then we may act at that point in time. But right now, I'm worried about this market. I'm worried about yields gapping up higher and these high beta names keeping it together. Thanks, Joseph. Got 9 people on, 9 likes. That's excellent. Thank you very much, folks. Okay, for Tom, NFGFF. Newfound gold. Man, this thing hasn't taken a break. It's a great chart. A bit extended, but a great chart. I think I've gone over this chart before. Daily chart. Now, here's the value of the automated trend lines. We attempted a breakout on the 24th. Yesterday, we got that breakout, and it held. So it's worthy of a watch. The only thing I would do is this, is just as an insurance policy, set an alert to ensure that it doesn't break down. Because remember, this morning, I can't hammer this home. One of my strategies is to always, always, always know the correlation of your asset that you want to trade. So whether it be gold, a gold miner, I know how they trade. They normally trade inversely of the US dollar and of the 10-year yield. What's going up today? The dollar and the 10-year yield. What's also up today? Gold. That can happen, but usually only when there's geopolitical risk on. And right now, I checked the headlines. I didn't see anything, with the exception of this. The biggest geopolitical thing I could see is, I went over this last night with members, and this is not, I'm being tongue-in-cheek. This is not geopolitical. But this is a warning shot. 60% of the 146 SPAC mergers that have been announced since the start of the year are now trading below IPO price of their SPAC. So the air is coming out of that SPAC bubble. I warned about this a while ago. I don't think I've ever owned a SPAC. Never would. And sure enough, they're coming apart. So just be careful here. Know your correlations. And that's why I'm sending alert here, because I'm very skeptical about today's correlation of gold and yields in the dollar. It's kind of crazy. And I wouldn't short it on the breakdown. No way would I short it. So just keep an eye on it. And if they do break it down, this is a pretty volatile stock. If they do break it down, you can use the automated trend line functionality to identify support. You could use one of two. I see two here. The automated trend lines are picking up another one as well. I see this one here as potential support. And I see another one. This is the automated trend line here. So we'll go with mine first. All right, so S1 of 2, just let me know I have another support level that I prefer below if this one fails. So if this fails, I know there's another one down here. No need to set an alert down here right now. All right, what else do we have? DBA. Let's go to the weekly chart. For those not familiar, the DBA puts you long of agriculture, which since that CPI report a couple of weeks ago, that very, very hot CPI report, I expected these stocks to rip, or ETF or ETN to rip, and it did not. It broke down. Along with other commodities as well, not precious metals. Precious metals responded well. But the DBA outside reversal bar. So bearish week 1. I won't even call these bearish weeks here, despite the fact we were down. We eked out a gain last week, but this is a consolidation. Pure and simple. I think it's time to revisit DBA and quite possibly watch for a breakout on a weekly time frame. keep that active for a couple of weeks. Daily chart. Yeah, they tried to press it yesterday to the upside, but it was rejected. I don't see a rush here. I would wait for the breakout. You do have another resistance level above. Actually, I'm going to warn something because I don't want to get too overly zealous here. Keep in mind that this could be a head and shoulders setup. Left shoulder, head, right shoulder, neckline at, call it $18 a share. So I would really wait until we got to, a closing breakout on DBA. Volume yesterday was below average, which is good. $62, 640% return time. Good for you, man. Good for you. Congratulations on that. All right, with that, folks, everybody have a profitable trading day. Don't forget, take advantage of TrendSpider, 35% discount code below. I give it away free to silver and gold level members. Till tomorrow morning, everybody have a profitable trading day. Be well.